Hi everyone, and welcome back to Stock Talk. With 2013 already in full swing, we're continuing to look for new ideas for investors.
Exactly. Today we're going to be concentrating on a diversified approach for investors that has delivered consistent historical returns.
And consistent performance is something we talk a lot about in this segment, but it's something that investors really need in this economy.
Definitely. The pooled approach, which is no strange topic to all investors, incorporates various investment strategies into one model. So the opportunity for investors is that they can actually capitalize on different market returns following various strategies within their portfolio. For the CPMS Canadian 555, one of our most popular models, we're going to be incorporating an income, predictable growth, and momentum strategy within the portfolio. An income model is going to be concentrating more on high-yielding companies. Predictable growth, we're looking for companies that have rising earnings and reasonable price-to-earnings ratios. And finally, the momentum is going to be focusing on price movement and also companies with positive earnings expectations.
Sounds great. So I'm sure all the investors at home or at work want to know, what are the holdings in the portfolio?
Well, in the portfolio currently, the holdings are Ainsworth Lumber, Bank of Nova Scotia, Capstone Infrastructure, Canadian Western Bank, Chorus Aviation, CML Healthcare, Home Capital Group, Parkland Fuel, Patheon, Rio Alto Mining, Shawcor, Sierra Wireless, Superior Plus Corp, Transat, and West Fraser Timber.
So for investors who usually watch this segment, the chart up on the screen, it's actually a little different than usual. There's actually a letter grade associated with each company. So what does that mean?
Well, the letter grades are actually exclusive to CPMS. It's a grading system that we use out of the entire universe. So for instance, in our Canadian universe, we now have 733 stocks. A letter grade of A would be a great score, whereas a letter grade of E would be more of a poor score. In some of our models, we like to use letter grades instead of hard, fast data, as it won't cut off some actually good opportunities for these investors if they're off by only a couple basis points. So for 555, we're taking a look at the letter grades today, and you can see that they've attracted some pretty good buying potential.
Yeah, it looks like they're actually all in the upper end of the universe.
Exactly. In 2012, the 555 posted a total return of 16.7%. which was the highest return for any of CPMS Canadian strategies. By comparison, the S&P TSX Total Return Index returned only 7.2%. Since inception on December 31st, 1985, this model has generated annualized returns of 16.5% against only 8.2% of the index.
16.5%, that's a pretty fantastic long-term performance. So it looks like that model would really add value for investors.
Exactly. It's a fantastic model, one of many different choices, but just to reiterate to investors that sometimes disciplined money management has a huge spot in all of our portfolios and our investment goals. But just like with all of our conversations on Stock Talk, it's important for investors to speak to their advisor and make sure that this is appropriate for them, or do their own due diligence if they're managing their own investments.
Some great ideas here, Melissa.
Yeah, thank you very much.
And just a reminder, Melissa is not providing financial advice. We encourage you to speak with a financial planner or advisor before selecting stocks, or of course you can do your own research. CPMS software is only available to institutional clients and investment advisors. However, you can find free stock quotes at the top of morningstar.ca.